Alright guys, so what I wanted to do today was talk about how I used my algorithm that I coded specifically for my trading style to trade CPI day. So CPI, when the data was released, we got a nice spike up, and days like this typically are followed with a lot of volatility, and they can be pretty difficult to trade, especially if you're a newer trader. So the way that I like to trade is I will kind of wait on days like this for signal confirmations from my algorithm, and then I will couple that with my technical analysis and kind of like my trading knowledge and the way that my style, which is a scalping style, and then I'll take trades based off of that. So it's going to kind of couple as a video showing you how I use my algorithm and some of the new updates, as well as how I actually traded that day. So it's kind of like a trading recap and then tutorial for the algo, like a 2-in-1. So the algorithm that I use is called the All-in-one SMT algorithm. So if you look at my algorithms or my indicators on the top left, I have a few. So the first thing is the SMT dashboard. So this dashboard essentially just shows you these buy and sell signals on multiple time frames. So you can see if I hide that, that goes away. And then of course, as the name implies, there's a dashboard at the top right that gives you when the most recent sell or buy signal was on that time frame, and then it's also dated with the exact minute, hour, and day of the year. So that's cool. That helps me just kind of look at market sentiment and gauge that from a glance. I have SPY key levels, which is just these blue levels, which are marked as key levels. So these levels are marked based on intraday and hourly pivots and things like that. Like multi-candle tested support and resistances also fall into that category. And then I use my custom Fibonacci retracement levels that come from larger time frames as support and resistance as well. And then finally, I have the main focus, which is the all-in-one SMT algorithm. So if we click on the settings icon, I'll go ahead and walk you through all of the features that come in this algorithm. So the first thing that we can do is we can define our trading hours. So by default, I think this is it's a 24-hour system, but it is based on EST. So you can, if you're Central Time, if you're West Coast time, you can offset that by 3 hours and kind of find what time zone you're in and how that correlates to Eastern time. But since I am on Eastern time, I limit all of my signals and things like that from 9:30 a.m., which is market open, until 4 p.m., which is market closed. So we have what are defined as fast, slow, and slowest EMAs. So your fast EMA length is your shortest EMA. I keep that at 9. Your slow EMA length is your second slowest or second fastest. Doesn't matter how you picture it. And I use that as my 21 EMA. So these are the two that are primarily used for crossovers, which are part of one of the signal types that we can use. And so I like the 9 and the 21 if you are in a 2-minute time frame. A very common analogous one is the 13 and 48 EMA. And then the slowest EMA length, which is denoted as a purple line, which, yeah, I do have that. I just think, there it is down there, is the 200 EMA. So next we have, you can choose the color of any of your EMAs. I typically do white for my 9 EMA, blue for my 21 EMA, and then purple for my 200 EMA. So this bullish cloud and bearish cloud color, so we have an EMA cloud. If I uncheck this, you can see it'll disappear. And then if I click on that, I can enable it. So an EMA cloud is pretty simple. It takes your fast EMA and your slow EMA, and then it fills in the space between that, and it kind of creates like a ribbon or band, and that helps you, rather than view the 9 and the 21 as just singular levels or moving averages, you can kind of view that area in between them as a zone. And so when you have a bullish EMA cloud like this, when price dips into this cloud, you can kind of view it as its own kind of like demand zone, right? So if we dip into this cloud, oftentimes we might catch support within the cloud and then make a move higher. And then of course it just lets you see at a glance the sentiment. So we have a green EMA cloud, which means our 9 is above the 21 EMA, which just means that our short-term moving average is above our longer-term moving average, which means we have an increase in price over time. And then the gap between the two, which is like the spacing in the EMA cloud, that can also help you determine the trend strength. So if we have really tight spacing like this, you can see a lot of fluctuation. We don't really have an established trend, but as you can see, we have a pretty significant spacing that is somewhat consistent throughout, and that gives us a nice steady uptrend. If you're concerned, if you just like crossover signals, if you enable this, So if you enable bullish crossover signals, anytime there's a bullish crossover with your 2 defined EMAs, it'll give you a signal, and then anytime you have a bearish cross between your 2, it'll give you a signal that way. So we also have unusual volume built into the indicator. So what you can do there is, if you enable it, anytime you have a certain volume threshold that exceeds what's defined. So if you have, it's candle to candle. So if you have one candle and the following candle has 2 times the previous candle's volume, That's what happens when you select this 2. Then you'll get a notification, and that'll be denoted as a little marker under the candle. You can also set up alerts through notifications, so you can do you can get it to ping your phone, so you can do alerts through the TradingView app. You can also do alerts on the desktop, and then you can do you can choose the noise. You can do, like, I think, email alerts, things like that. But 2 is a pretty good standard. You can go all the way up to 5 and as low as just 1.5. So that 1.5 means if you get a 1.5x increase in volume on the next candle, you would get an alert. And then you can also define unusual volume hours, and that will kind of allow you to specify a finite range where the unusual volume will trigger. So ORB settings. So the ORB is essentially, it's just opening range. ORB stands for opening range break. So that's kind of a term used when price exceeds or kind of goes above or below your opening range levels. And what's cool about the ORB, which I have enabled here, is, let me actually let market open. So you can see that these white lines are generated from the opening range of the opening candle here on the 5-minute. But if we switch to, let's say, the 2-minute, it's then going to adjust accordingly, and now the opening range is defined by the first 2-minute candle. And you can do that for any time frame. 30-minute is the most common, but it works for any time frame, and you can adjust based on that. And then there's also your unusual, here I have your ORB offset. So if you're in a different time zone, TradingView can't auto adjust to your time zone from a script. So if you offset it by however many minutes you are from Eastern time, then you can fix that. And then you can also change the color of your opening range. So there is, I don't really use this too much, but there's a chop filter. And essentially what this is if you look at the chop filter settings, it omits signals using some criteria. So we're using a Bollinger Band and Keltner channel. Those are the kind of 2 concepts that are used in this chop filter. And you can define how tight you want your bands and the multiple you want on there for the channels, things like that. And then that can, basically what it's doing is it's using TTM squeeze to only give you signals when it has identified a trend. So that way you kind of reduce some of the noise. But unfortunately what I've noticed is sometimes while it does omit some choppy signals and it prevents breakouts or fakeouts, it can also sometimes miss some really strong signals. So me, I just kind of use my own intuition. I look at kind of volume, I look at EMA tightness, I look at where VWAP is, I look at the candle formations, things like that, to help me identify when we have chop. You can mess with VWAP, change your anchor period, things like that, and then you can change the color. You have automatic stop loss and take profit. So essentially when you enable this, let me see if I can use it on a signal from here. Let's do that. So let's go into our settings. If we enable the automatic take profit or stop loss. So if we enable, let's use, I don't know if there's a 5-minute sell, but let's use that. So let's do enable stop loss, and there it is. So essentially there's a sell stop loss that is up here, and you enter this sell signal, and if I enable take profit, now you're going to see we're going to get a take profit zone down there, and price actually hit that level. So that's your stop and that's your take profit. And then here as well, you enter a buy signal, there's your stop loss down there, and there's your take profit, and that is hit as well. So it just uses, I've noticed, I've kind of played around with it, and the best risk to reward seems to come from using this 0.1% on the S&P 500. Obviously, the percent is going to differ based on the price and the market capitalization of what you're trading, but that's kind of a cool little feature if you like to use hard stops. And there's automatic support and resistance built into this. So the automatic support and resistance takes, like right here, a very strong pivot point, and then it marks the resistance as a red line, and then it does the same with really strong reversals and supports, and it marks those with a green line, and then it also leaves some, so it marks 4 at once, and then when it moves on, it just leaves this little gray tag, and then you can remark that level with the horizontal line tool. So you can see there's that resistance level there. Now let me go back to the 5-minute chart, because that is what I trade off of. And let me finish going through what we have on here. So let's scroll down. Now we also have supply and demand zones. So we have these supply and demand zones are created from intraday pivots from up to the last 10 days. I really just focus on the last 5 days. So it kind of takes the highs and lows of day and creates zones from those. So a lot of people use those as key levels anyway, high and low of day of previous days, but I've turned them into zones to kind of help you get a little bit more, it's easier to trade zones rather than a level, because you kind of have a larger area that you need to be careful of, and I've been using those and they've been pretty helpful. You can change the color of your zones, the opacity down here. You can also change the size, the label offset. If you don't like your labels here, you can move them wherever, and the label colors, and then you can uncheck however many zones you want enabled. So you can see these red and green areas are our zones. So on top of that, so that brings us to the bottom of the inputs. If you go into style, here's where you can change all your styles. So I typically, you can have the 9 and the 21 EMA enabled like that. You can see the actual lines, but I don't care for that because it's inferred that the top and bottom of the EMA cloud are the 9 and 21. If you have your EMA crossover signals, you can enable those. You can have our key levels that are automatically plotted are pre-market high, pre-market low, previous day high, previous day low, and then current day high and current day low. You can enable and disable those as well as VWAP, and then you can turn off labels and things like that. So those are all the functions of the SMT indicator, and I'm going to show you how I use it on CPI day to trade. So I was really focused on signals on this day because I didn't want to sit there and stare at the charts all day, especially with the volatility. So once I got a signal, it would alert me on my phone, and then I could take a look at the screen and see what's happening. So I'll walk you through candle by candle. So you can see we already dip into this EMA cloud, find some support on VWAP and this ORB, and then we just continue from there. There's a nice breakout to the upside. Nothing really here for me to trade. So that one didn't print, but there's also a new signal that I've integrated in here called the PR signal. It just marks like a little X on top of that candle. So the PR signal, it stands for potential reversal, and if it's a red signal, it's a potential bearish reversal, and then the inverse, if it's a green signal, it's a potential bullish reversal. And if they print at candle close, I can typically take those as a potential reversal. That's very I emphasize potential, as you have to look at many other factors when deeming if that is a strong reversal or if it's just something not worth taking. Like if it happens in a very strong uptrend, you get a downward reversal when there's a lot of things saying that, you know, we still have a lot of strength, and I kind of take that with a grain of salt. So showing a little bit of consolidation here. Nothing too much. This is kind of choppy price action that's holding above the EMA cloud, but really nothing that I would want to trade. So you see this potential upside reversal, which what would make me question this a bit is where we closed. So you can see that we actually closed below the EMA cloud and this auto resistance level. So unless we could close back above this auto resistance, then we can make a push to the upside, but otherwise I don't see a reversal happening there. Well, there could definitely be a reversal happening there, but I'm a little weary, so I always wait until we close above the level that I'm watching. And you can see this is a really strong resistance that held a support earlier multiple times, right? So I'm going to wait until we get above that before I look at hopping in for a reversal. And you can see that was not the case. We can continue to sell. You can see our volume is starting to rise a bit here on the sell side, so I'm looking at potentially a downward reversal. So what I usually like to see is if we break VWAP, we can potentially make a push down here to this key level, my SPY key level that is marked in blue. Look at that, we find support on VWAP, and then not only, you know, VWAP, but we also have pre-market high here. So you almost have like a double support area there, and then we make a push back to the upside. Can't really break out of this resistance level, and now it's starting to look more bearish. So here's where I've actually, while there isn't a signal here, this is a great potential short. You can see that we closed, you know, we had 3 bearish candles in a row. There's a nice rise in volume here on this close below VWAP. We pulled back and then rejected pre-market high. And so what I would look to do is potentially enter this candle and then scalp to the next key level with a stop above VWAP, since VWAP is right there. You can see, boom, dump on that next candle, and then we get a 5-minute sell signal. So this 5-minute sell was where I entered puts. You can see that that's a very strong candle. We keep increasing in volume. We have a heavy sell-off happening here. Now, there's a long way to go to our next level. You know, there's a level right there. So if you want to use an intermediate level, you can use the daily low, which you can see marked in purple. So that can be your first target when you enter this short, and you could also just take it all the way to the next key level if you really have that much confidence. Personally, I scale most of my contracts here at this daily low because there's also a nice sizable wick here, so we could get some buying pressure, but I'll let you see how this plays out. Right after that sell signal, we have a huge dump, and pretty cool to see where we bounced here was this SPY key level. And that volume is insane. That's a huge amount of volume there. So that was the put that I took. These went a good over 100% on puts there. I took SPX puts, but most of them were scaled out at that daily low. So I did not hold. I only held a couple to this key level right here. You can see we kind of looks like a bear flag here, right? Kind of might make a push back down to that key level. There we go. Again, this key level is holding. And then we reverse. So look how this key level held 5 times. You know, when I see a level being respected multiple times, obviously I'm not trying to short here. If you are looking for continuation, you would want I always use candle closes, so maybe you look for a candle close back below this key level, and now we have a new low of day. But you know, it's holding, so there we go. Nothing really worth trading for me here. So you can see we get the support 444.91 that is auto-generated with that label. So I'm going to mark that and keep that for the rest of the day. Okay, now we're looking a bit bullish, but I'm still a little weary from this huge dump. But we could see a push back to this level, but I wouldn't be surprised if we get rejected as well. Yep, so it looks, there we go. So that was not something I would have traded, but it's nice, bull flag, and push to the upside. Now what we really want to see is we're back to the same scenario where we're running into VWAP. So back here it was VWAP and pre-market high. Here it's like VWAP and a key level. So maybe look for a push up to pre-market high if we can close above this resistance area. It's almost like a triple resistance area because we also have this kind of opening level here from the 5 minutes. So we have that level, we have the key level, and we have VWAP. And could not break through that. 21 EMA is holding, but this is looking a little bearish. There's a bear flag, push down. Potential maybe tweezer bottom here. There we go. And then again, we're in the same resistance area. So this is the second time we're testing this area. Now I'm even more confident if we get a breakout, we can get a nice push. Maybe not all the way up to pre-market high, but this is our second time. The more times we test the resistance, when we break out, we usually have a stronger move to the upside. And there we go. So what you can do here is you can now look to potentially take this to pre-market high. You can use the same strong support level, well, as a resistance level now flip support to see if you can potentially, you know, get an upside move. So you can see we tested this area again, never closing below VWAP or that strong support region. And there you go. So that was my other trade. So that's a nice trade right there. Now we're getting that push up to pre-market high, and I would want to get out of all my position there just because, you know, that's a strong level, and we saw that it was a strong support here. Now it's flip resistance, so we don't want to stay in too long. Pullback, consolidation at this level, and then we have this signal. So this is a PR signal. Like we said, potential reversal. So this is indicating that we could have a potential downside move. So now I'm watching for a reversal, and you know, on top of that, we have some more conviction. We rejected pre-market high 3, 4, 5, 6, 7 times. We just could not break through it, and then we get this increase in volume, and we had a pretty significant push down, but we did close inside the EMA clouds, but we could start to get a potential reversal. This kind of looks like maybe it's a hanging man candle. So there you go, nice reversal after this signal. And we find support again in the same region with those 3 levels. Looks like it could be bear flag in here. And now we're getting some consolidation along this 5-minute candle opening range level. And sell signals. So we see that we had kind of like a head and shoulders pattern. We had the potential reversal at the top, and now we're getting sell signals. So now that we're getting these multi-time frame sell signals, I can try to get a nice little scalp. So what would I do? I would take it straight to that auto support level that was generated by the algo, 445.25, so I can scalp some puts there. This is a lot more risk on this one because we don't have any stop areas up above, right? Because we simply don't have any EMAs all the way up until here. But what you can do is you can draw some intraday supports and resistances yourself, and then you could use those just like that, maybe as your stop. So maybe you can use this level as a stop or this level as a stop, but either way I'm scalping to that next level. So we hit that next level and we get a little bit more, and then the auto support does its job and we get a bounce after that, and we take our small scalp profits there. And then we get kind of this V-shaped reversal, and we're back to the same area from before. Reject it again, and then the day closes. So just to recap, you can see we had a nice 5-minute sell signal here, followed by a push to the downside to our key level. We had this nice head and shoulders formation, potential reversal signal, push down, formed the right shoulder, sell signals again, made a nice push down to this auto support, and then reversed and keep projecting this same area for a nice little pullback and then close right there. So hopefully you guys enjoyed this video. It's a little bit more detailed, and yeah, so thanks.